Hi, we are exactly 9 days away from what Finance Minister Nirmala Sitharaman has said will be a never before like budget. And the whole country, especially because of the pandemic and the slowdown, is looking forward to what the government has in store for us. Growth or fiscal deficit is what Professor Ila Patnaik will talk to us about. Should the budget focus on pushing growth or managing fiscal deficit? And that is what we talk about today. Before that, I have one small appeal. What is fiscal deficit? Fiscal deficit is the gap between what the government spends and what it earns. There are deficits elsewhere also, even in media organizations which spend on gathering and bringing news to you, and what they make from doing that. Uh, it's a public service, but it is also a business. And there is a gap, especially in young digital organizations like ThePrint, because we are new, the economics of the market is broken, and we don't have people paying for what they read and watch, which is what you should do. Because you pay for newspapers, you pay for cinema tickets, you pay for TV and cable TV and Netflix and Amazon Prime and whatnot. So why not pay for the prints videos, the prints text? We spend money too. We can't have a deficit like the government of India. Pay for it and make us grow and help us prosper and bring you better videos, better stories, get our reporters out and get them to do ground reports. So coming back to the topic at discussion today, which is growth or fiscal deficit, uh, Ela has a very, very simple, straightforward point to make. This budget is not about fiscal deficit. This budget is about growth. Why do you say that, Ela? You're very, very unequivocal about that.
Yeah, I think it's very clear that at the moment the economy needs a push. And it is also clear that there is a consensus among economists, advisors, various political parties that at the moment the economy needs growth. And at the moment, if the government started focusing on fiscal deficit, not only is it very hard to do, because we've had a tax revenue downturn, disinvestments haven't happened. I mean, it's been a year of pandemic. So not only is it that it's very hard to do, it would also be very, very unpopular. And I don't think at this moment it makes any sense, because what is borrowing for? I mean, we, all of us, whether it's households, whether it's governments, we borrow in bad times and then we pay back in good times. So these are bad times. These are times when the government has to have a pro-growth budget, that we are already off the fiscal deficit path, the FRBM numbers, and it is very likely that the budget estimate for 2021 will be maybe 6 to 7%, so much higher than what we thought it would be. And for the coming year again, the budget is likely to be an expansionary budget. So that's the sense that I think almost everybody has, and it would be very, very surprising if that were not the case.
So give us a background to the huge fiscal deficit we have run, or we will run, and we will see those numbers, Ela.
So there are two things, obviously, to any deficit. One is the expenditure side, and the other is the revenue side. Now, if you look back at this year and in the coming year, then when the economy goes down, transactions go down, people buy less, sell less, produce less. So tax revenue goes down. We've imported less, so it's custom duties down. GST, which is indirect taxes, is custom duties and GST. So that is down. And income taxes and corporate taxes are also likely to be sluggish because of the decline in incomes. I mean, this was a unprecedented year of a contraction of GDP of 7 to 8%. So even if the tax GDP ratio were to remain the same, then also you would find that there would be a contraction of revenues. At the same time, non-tax revenue like disinvestment has also seen a shortfall. I mean, we haven't seen the Air India disinvestment go through. Not that we expected that it would happen in this year, but then that was even when we did not expect the pandemic. Now, after the pandemic, that's clearly not happened, and there are other sales of public sector enterprises that have also not happened. So the report suggests that this is far short of targets. So that's on your revenue side. Now, on the expenditure side, again, you've had to increase whether it is 1 lakh crore, 2 lakh crore, we'll see what the actual numbers turn out to be and what the government did spend. But there was additional spending during this year because of the pandemic. And even in the coming year, when the economy has to be given a push, there will be sectors that will require support. There will be people and sections of society that will require support. And so you would expect that in terms of money that is transferred to people, it might be higher. And second, there might be an attempt to push up investment by, say, pushing up infrastructure investment that the government can do. So, this is the time actually when you would want a higher deficit and you would not want to stick to the path of fiscal prudence. It would not be prudent to stick to it. Whereas last year, when we didn't know what was happening, we did think that, okay, go slow and cautious. But now, the story is pretty much unfolding.
Ila, you make this point in your column today about governments generally, being shy of admitting the real fiscal deficit. And the talk has always been about how it's much higher than what is actually disclosed in the budget or by the government at various points of time. That being the case, do you think that habit of trying to keep it conservative can be given up so easily?
See, it's about what does the moment require. See, every year when, I can remember the last 13, 14 budgets at least, when we would talk about how oil bonds shifted to off budget. So there would be oil subsidies being given by the government, but the borrowing would be done by oil companies, which should have been done by the government because subsidies are something that the government gives. Like that, throughout all these years, different governments, different finance ministers have pushed its borrowing to PSUs and tried to make it appear that its budget was smaller than it was. Now, my argument is that this is the year when it can actually be transparent. So if you look at last year's, the CAG reported that the actual budget deficit, the fiscal deficit was about 1.5 to 2% higher than what the government had accepted. So not only in the budget estimates, but in the revised estimates and in the actuals, the deficit was actually 1.5 to 2% higher because borrowing was done through other channels, such as through public sector enterprises. But the Food Corporation of India, ONGC, those entities that are able to borrow were being made to borrow for expenditure that was the current expenditure of the government. These were not for their capital investments. Now, given that this is the time when everybody is saying go for a higher deficit, so the higher the deficit, Finance Minister Nirmala Sitharaman can rest assured that the critics will be happier with a higher deficit, not in contrast to what was happening every other year in previous years. So this is also the time when you can be transparent about your deficit. You don't have to hide it because you're going to be appreciated for the level of deficit. And, once you are being transparent about it, hopefully this will set us on a path where in future also we can be transparent about the actual deficit and not try to push it off the budget and hide the deficit.
Ila, you made a very strong point about the government having to push growth and not resort to collect taxes to boost its revenue, even in the next fiscal year. because that's how you can, first push demand. But we've also been hearing these things about vaccine cess, maybe tax higher brackets more. Do you think governments, even in such kind of situations, are somehow unable to give up the notion of taxing people?
See, unfortunately, yes, you are right that governments do always think of, and particularly in our country, uh, uh, expansion, a fiscal expansion, is not often understood as it should be of a higher deficit, which can be achieved by lower taxes also. Very often, people understand fiscal expansion and that's completely wrong, but in layman terms, many times in the media you see as if it is only about an increase in expenditure, even if that increase in expenditure comes about by an equal increase or even a more than that of an increase in tax revenue. Now, if you go back to economic theory, then the multiplier, a balanced budget multiplier, is much smaller. So you could do that, and you would get some increase because the higher income category actually spends less than the lower income category. So when you make those transfers, but that effect is very small. I mean, what you want is actually a larger deficit. So you want people's spending power to increase, which is why many times a fiscal expansion, and which happens very fast and quickly, is one where it is done through tax cuts. If you go back to 2011-12, when Pranab Mukherjee was then the finance minister, after the global crisis had hit India and we were seeing the effects of that, fiscal expansion was done through tax cuts. And, that immediately puts money in the hands of people. You buy one thing, you save a little, you spend it on something else, and that increases demand. And, one is hoping that that's the way it will be understood and not through trying to increase taxes while it is increasing expenditure, because that's not as expansionary as one would like to see the deficit be.
Ila, we're getting a lot of questions from our viewers, so I will end our own discussion by just making one last point of what you say in your column. For our viewers, I would like to tell them that this column will be there in the description of the video after the live video discussion ends. Ela says, there are two ways to push demand. One is through direct cash transfers to deserving sections of the population, and the other is rationalizing or cutting taxes for other sections of taxpayers. And how also the government can minimize the negative impact of a high fiscal deficit through strong new fiscal institutions. So please read this column. It's very, very insightful, especially in a situation we are heading into a very significant budget. So we'll take questions. Please send your questions. We already have quite a few of them. I'll start with Tarush. Hi, Tarush. Welcome back to Economics, a very regular viewer, and we are happy to have you. Tarush asks Ila that can we see a massive infrastructure push and financing it with printing currency?
See, I think financing it with printing an infrastructure push with printing currency is unlikely. Now, first, infrastructure spending doesn't happen very fast. The government has to prepare plans, push out contracts, get bids for it, and it takes a long time. So for that reason, just a very large infrastructure push, a lot might be announced, but let's talk about what will actually happen on the ground. Even if there is an announcement, then I don't think that will be a very large, actual increase in demand coming from an infrastructure push at the right time, because we need it now. We need it like in this coming quarter. We don't need it 3 quarters down the line when all the procurement processes have been done. The second reason is that as long as the government is able to borrow from the market, and if there is a depressed demand from the private sector and household savings are available, then partly domestically and partly foreign, then the inclination is to go towards borrowing that is available from savings. You see, if you remember in 1997, after the Ways and Means Agreement, deficit financing or printing money by the RBI and handing it over to the government was something that was stopped. Now, this that was followed by putting an inflation targeting framework in place. Now, if the government was very, very desperate and had to do that, I could see it doing it. But I don't really think that we are currently in a situation where we want to inflate the economy and take that risk of printing money. So part of this is wishful thinking. I hope the government doesn't do that. And I think part of it is trying to understand the situation and seeing that the government doesn't look as desperate as it needs to be before it does something like that.
I hope that satisfies you, Tarush. Viren Parekh asks, so there's a bit of a phrasing issue, but I'll try and understand what he's saying. He says President Trump's tax cuts help the American economy. Should India do something like that?
So I think that's what I've argued in my column. Please do read my column, that tax cuts, rationalizing taxes, reducing the powers of the tax administration. So, the tax raids, which earlier used to require approvals by many levels, now don't. So all of that is important, both for both lower rates as well as a simplified, more rational, less intrusive tax regime. And the last 4 or 5 years, I think you've heard a lot of that coming from industry, particularly, where it is felt that the tax regime in India is not investor friendly and it needs to change.
Yash Bhatia asks, how should the government increase its revenue from disinvestment or divestment? Which are the few sectors that the government should stay back?
So if a sector is about national security, where so it could be, in our case, it could be nuclear power, or it could be some specific kind of defense equipment, or it could be any other critical infrastructure, which, if it was disinvested, risked our national security, then that is one sector that the government needs to stay in. It should continue to stay in that sector. Another consideration could be if there is a natural monopoly. So sometimes, if you are a well-functioning system, you might be able to break a national monopoly. But in other cases where you're afraid that you cannot do so, you might want to actually continue. So water distribution, power distribution. Of course, there are cases where you have been able to break it and you've moved to private as well. But if the situation is such that, whether due to administrative reasons or due to just the nature of the sector, you think that there will be natural monopolies that will then be exploiting the consumers, then you don't want to exit those. So those are the kind of sectors where you want to stay. But for the rest, where there are businesses which are in a competitive space, which are not a risk to national security, the government can get out of those.
This is a question from, I can't make out the name very clearly. It says SHNIJS. Can't pronounce that. Will India be the third largest economy by 2030, or do we need another set of reforms?
See, I feel we need more reforms. I feel we need agricultural reforms, but and the kind of reforms that were tabled in Parliament and enacted. But unfortunately, it looks like it's not easy to do those reforms. Similarly, there are many other sectors. So we talked about the power sector just now, that you may want to privatize distribution so that discoms don't keep getting into this difficulty of having to run deficits every few years. And there are many other sectors in which it is possible. It has been done around the world. There are even examples within India where in some places it is successful. and where we need to allow growth to happen. The financial sector, banking sector, and many other sectors which need reform. I don't think we'll have the time to go into all of those, but I think I agree with you that we do need more reforms, and we do need to uh, mm, remove those constraints that shackle businesses and people from growing.
Shivam Arora's question is also a related question. He says, and it's in the context of what we are seeing with the farm reform laws. He says, what reforms or which reforms can be done without any protest? The government as well as the people of India need to grow a thick skin and not resort to misinformation or misplaced bias. We can't disagree with that.
I mean, absolutely not. So, for example, bond market reforms. I mean, having the government getting a bond public debt management agency is something that is between the government and the RBI. The RBI is currently the bond manager, or the debt manager, sorry, the debt manager of the government. And, it has restricted the participation in the market. It has restricted the growth of infrastructure, the depository. Everything has restricted access. But this is a reform that I don't think. I mean, you're not going to get people on the streets if there is a bond market reform. So there are many things that can be done. I mean, again, another example would be the resolution corporation. Now, if you look at the difficulties into which financial firms are falling into, with especially even more after the current crisis, you do need a fast resolution mechanism, an orderly resolution mechanism. But the FRDI bill got pushed back because of the bail-in clause. I guess we could amend that bail-in clause and go ahead with that reform. So there are many more examples that are about reforms that can be done without having protests on the streets.
We have another regular viewer, Parimal A. Thanks, Parimal, and hope you're doing well. Parimal asks, ma'am, should the government of India float Masala bonds to raise finances from foreign markets, since the yields all over the world are at their lowest?
Well, the government did float a proposal to have rupee denominated bonds. So Masala bonds are basically rupee denominated bonds, where the currency risk lies with the person who has lent us the money. So we, even if there is a depreciation of the rupee dollar rate, the additional burden of returning it, if it had been denominated in dollars, does not come to us. So if the government has to borrow, then it could borrow sovereign borrowing in rupees, or it could borrow in dollars, but rupees is clearly less risky. So out of the hierarchy of, let's say, flows that we could want and the borrowing that we could want, that would be one. But if you remember, when this proposal for sovereign borrowing by the government of India was floated about a couple of years ago, a couple of budgets ago, I should say, just before the budget, there was a lot of opposition to it. I remember that somebody like Raghuram Rajan and Viral Acharya at that time were arguing that the only difference between Masala bonds and the government of India bonds where FIIs are allowed is that one is onshore and one is offshore. So when you can have onshore borrowing, when foreigners are willing to come to India and borrow, and you're doing rupee denominated borrowing, then you might as well allow higher caps on their borrowing or buying rupee denominated bonds onshore. So I think that's what the government eventually went with, that it did not do Masala bonds, and it allowed foreigners to buy government bonds here. And I think that's not only in terms of risk, it is the same, but it is also that then it helps your own bond market from developing.
We are running out of time, Ila, but there are a lot of questions, so we'll take two more questions and wind up the show. Naveen Sharma asks, does selling public sector undertakings the way to manage fiscal deficit? Or is this government really looking positively towards privatization?
See, selling public sector undertakings in principle should not be part of the current revenues of any government, because it's not like tax revenue which is coming out of the flow of income in that year. So if you think about this as stocks and flows, then it should really be something that, okay, you sell off and you use it only to return debt, for example. You don't use it for your current expenditure. So but having said that, all governments, you look for opportunities to generate more revenue, especially when they have a large deficit. So they are basically trying to cover their revenue. And if it were, money is fungible, so even if it's not earmarked for reducing deficit, in a way, if their expenditure is what it was going to be, then it is taking on less new debt of an equal amount. Now, actually, that is only a very small part of the effect of disinvestment. The larger effect, and I think that's what you're alluding to, is that it leads to an increase in efficiency. Because there are resources that are stuck in public sector enterprises that are either unproductive or less efficient, at least in those enterprises, if the land, labor, and capital that is locked into those enterprises is freed up, and freed up in the sense that suppose you sell it to a private producer who is able to actually produce more output out of the same resources, because the management and ownership has changed and the incentive structure has changed, then that is the real benefit to the economy, not just the flow that the government gets out of this money.
Last question, Ila. This is from Gautam Bharadwaj. We are hearing speculation that import duty may be raised by 5 to 10% on many items. What's your opinion? Are we heading towards protectionism again?
See, I don't know about what the speculation is, and I think let's just wait and see. Now, I think it's coming from some views which seem to say that Atmanirbhar Bharat is about higher protection. We have seen the government do that to some extent, but I don't know what's coming in the budget, so I won't comment on that. I would just say that if yes, Atmanirbhar Bharat has tried to protect some industries, or at least that seems to be the sense in which, in some cases, the government has moved. Many economists across the world, I think, and India, and even those who have been former advisors of the government have said that this may perhaps not be the best strategy to move ahead. But I think, faced with China, almost every country across the world is seeing that China is, and Chinese products come and flood the market, and your own manufacturing shuts down. So I wouldn't be too surprised if on products that come from China, and maybe final products, not intermediate products, but final products, to protect that industry, there is some increase in import duties. I'm not saying I'm hearing any rumors, or I'm not saying that I know what's coming, but I'm simply saying that I would not be surprised if on Chinese final products that could possibly be produced in India, if there was a higher import duty, then we might see a higher duty. That won't be surprising.
Thanks a lot, Ila. We will wait for the 1st of February for more updates on what import duties the government might impose. But this was a very detailed discussion on fiscal deficit and growth debate in the budget. Next week, we will have another live focused on the budget again, and we will come back to you on Monday, the 1st of February, with a live discussion on the budget immediately after the finance minister presents it in Parliament. Until then, stay safe, and thanks for watching us. We will be back again next Friday. Thank you.